Hello and welcome to the Green Profit Academy Pros podcast. This show digs into the challenges in growing a lawn care and landscape business while maximizing your profit. I'm Christeen Era.
And I'm Steve Bousquet. We are the green industry experts in profit, growth, and leadership. Hello, Christeen. How are you?
I'm great. How are you doing today?
I'm awesome. I'm excited. We have a guest with us today. Her name is Jaime, and she is going to share some really powerful information with us today that can help our small businesses. So today's episode, we're going to be discussing how a small business owner can track and understand their financial data in a way that is crucial to the success of their business. And we're going to be having a conversation with Jaime Turney of Core Growth Strategies about why tracking and understanding financial data is important in our small businesses.
So, Jaime, I know you pretty well. We've been working together, for quite a while now. And I just want to take a moment for you to share with everybody what it is that you do at Core Growth Strategies. What's your position, your role? What kind of magic do you create at our company? And then also, what is your background? How did you get here? What's your knowledge when it comes to financials and accounting for businesses?
Sure. No, thanks for having me today, guys. It's a pleasure to be here. So we've been working together for almost 2 years, I think now. It's gone by fast, but so my role at Core is I'm a COO there. I handled all over in the internal aspects of Core, but also working directly with our clients, which is kind of where my love and passion kind of comes in. And, I work with them on more of the high-end issues that they may have, working with them on the direct, financials, going over, discussing. My background is I'm a CFO by trade. Numbers have always kind of come easy for me, even though, it's like a love-hate relationship for myself. But it's interesting because I love working and trying to find how a business can become better and where they're stuck. I've spent decades working in accounting with small businesses all the way up to large international businesses with overseas markets and whatnot. So my range is quite huge from that standpoint. But what I love here is working with multiple clients and being able to help them grow and find where we can tighten up little things to add that extra to their bottom line.
Yeah. Yeah. And I've seen you, when we brought you in, you connected with our clients quickly, and they rave about working with you and the insight that you and the team has given to them as business owners. And that's one of the reasons why I kind of wanted to invite you. Steve and I were chatting. We're like, Jaime would be a great person, to bring onto the podcast and chat about this, because we hear and you work with some of the clients in our coaching program, and they just rave about, the insight that they've gained and knowing their numbers and why it's important to know their numbers. So we felt that it was just such a great opportunity for you to join us today so you can give some insight, from a perspective on the other side of why it's good to know your numbers, like what's important, in a small business to know your numbers, and also to kind of to shed some light on, it's not that hard, it's not that scary, and it doesn't have to be, intimidating. And so could you take some time and just kind of explain why tracking and understanding financial data is important to a small business?
No, I'd be happy to. Absolutely. And you're right. It does seem a little overwhelming at first to a lot of clients. And it's like, I just don't know if I could do this. But even with the software that they have, like that you can get for free, or you can do, we would recommend QuickBooks Online. It makes it so much easier once you get set up to run your business, and at least to get it in a format where you can see it. So I think to track and understand your financial data is important, because it helps to make informed decisions. As a small business owner, you really need to keep an eye on your finances to determine the health of your business. Really, you think you might need to grow or want to grow, but can you afford to grow now, or should you wait for, a different investment opportunity at a later date? Second, like tracking financial data helps to identify areas of improvement as well. You analyze that financial data and, you can take notice of if your expenses are becoming too high, or maybe your revenues become stagnant and you're not growing as fast as you'd like. So by being able to, have that financial data, you can then take the steps to reduce those expenses or improve those sales. I think another reason on top of that, especially from a small business perspective, is cash flow, right? Everyone is looking for that, where are we? And, we always try to work with our clients and not have them look at the bank balance to make those financial decisions, but to actually look at your financials to make those decisions. And I know that you and Steve have talked about like Profit First in the past, and like all of these things help, give you those tools to do so. But by tracking your cash flow, again, it's that survival. Can your business survive? Can it grow? Can you have the cash to pay your bills or payroll, or, or to invest it back into your business?
Yeah.
A couple other points I think would be, tracking it for tax season. We just got over tax season. All of our CPAs are like breathing a sigh of relief right now. But knowing that you're tracking the financial data so that you can report it to the IRS correctly, I know is a huge stress factor for a lot of businesses and business owners. And on that too is if you want to grow, maybe be able to use your financials. We have several clients that use their financials to secure a loan or further investments to maybe open another office or another branch somewhere. So, a lot of those, there's several, but again, those are the high points of kind of why it's important to track your data.
So, Jaime, you're saying track my financials and make sure my numbers. Help me understand, what are my financials?
That's a great question. So, you've got three main financials that we would refer you to. The first is obviously your balance sheet. And some of these, when you come to financials, it can be overwhelming to some business owners because they don't actually know what these financials, how to read them, right? And one of the things that we do is we work with our clients to give them that business acumen and help educate them as we work with them so that they can look at their financials and know where their numbers coming from. So on a balance sheet, when you look at the business as a whole, that basically gives all of your assets and all of your liabilities. That tells you the liquidity of the company, what other, maybe you've purchased equipment, you have fixed assets. These are huge things, especially when you're looking from a bank perspective, if you need to go get a loan, because these assets, or your AR is an asset with your clients that you can get loans from. It also shows all of your liabilities. So any notes that you may have on that equipment, any sort of debt, credit card, things like that, other loans that you might have, show up on your balance sheet. The other one would be a profit and loss statement or an income statement, also known as a P&L. There's a lot of terminology, different terms that are used for that. That tells you where you're standing from a sales with your income and your expenses. And so that lists your income on top with your COGS that are associated with making that or producing that income, gives you your profit. From there, you have your expenses, from anything that you may spend on rents to certain payrolls if they're in office versus in field, or any other office supplies, all of the things that are necessary to run your business to get that bottom line of your net overall income. And that, again, tells you if you're actually making money for the year or month versus not making money. Because I know a lot of business owners who work so hard, and at the end of the day, they look at that and they're like, I just don't have any money in the bank. I'm not making money. Mm-hmm. And again, by looking at these financials to make the decisions for your business, you can know where to tweak. Well, I'm spending too much money here, or not having enough income come in. And then you have your cash flow, which is another one. And that kind of is where you've used your cash, whether it's you've invested it back, you've used it for operating expenses and whatnot. So those kind of tells you the ins and outs of where your cash flow are going.
So the three main financials are going to be the balance sheet, the P&L, and then the cash flow statement.
Yes, that is correct. In a
Yeah.
long roundabout way that I just,
Yeah. Yeah. And I think that's one of the things is there's, when we're looking at people's books and we're talking about financial and financials and more of that transparency, there's kind of this disconnect where it's like, okay, well, yeah, I've heard of this cash flow statement. I've heard of this thing called a balance sheet. I've heard of this, P&L. Like, what is it supposed to tell me? And I have seen, and I know you've seen this as well, and Steve has definitely seen this in, our coaching where he's like, we'll sit down and we'll have a conversation and he'll look at the chart of accounts and he'll look at the balance sheet or the P&L, and it is a hot mess. It's the structure is wrong. And part of me wants to be like, well, no wonder why you can't understand this. This thing is a train wreck. You're not going to be even like a skilled person in accounting is going to have trouble, deciphering this report because of the structure. So I think some of it's not just the lack of business acumen that some business owners have because they're so good at their craft. I feel like some of it is the way that their chart of accounts or their books are structured. They're never going to see a clear picture no matter how long they stare at it or how much they understand when it comes to their financials.
absolutely. I agree with you. And we call that the foundation of the business is that chart of accounts. And when we say chart of accounts, it's essentially the list of accounts that are in any like online system where you allocate transactions to, right? So a chart of account would include your income. Maybe you sell a specific product. When you do an invoice to a client, it gets coded to that chart of account income line. Then you have a COG associated with it, right? So the bill may come in that you have to pay for product or merchandise that you then have to pay to a vendor. That bill would then be coded to a COG, which is part of your, income and COGS, right? Make up your gross profit. So that's part of your chart of accounts. Office supplies is a chart of account. Rent is a chart of account. So when we say chart of accounts, it's like that is literally the foundation of what your financials are how they're created.
Right. Yeah. And we've even seen some to where their, variable expenses or their cost of goods sold is it should be in their cost of goods sold, like what they're tracking to understand what, their team is working on and if it's producing revenue. And it's down in expenses to where like their field crew is down in payroll in their fixed cost. And it's really a variable cost or a cost of goods sold. And it's like, well, no wonder why you don't know how much money you're making because your financials they can't even tell you that. They're not structured properly to be able to spit that information out.
Yep, you're correct. And having that chart of, and we do a chart of account revamp for some of our clients, and is putting them back in line of where these charts should be, so that when they do, we look at their financials, they can see it, they can read it, like you mentioned. Even they just can't understand it because it's all over the place. And so it puts it into a structure format that makes sense, and then they can actually truly see the state of their business.
Yeah. And Steve, I know you have experienced this more so, before we launched Green Profit Academy. I had gone into your business and kind of turned everything upside down and gave it a good shake, which is what I do in every business that I get into, that where I'm doing a profit assessment, and I had questions about this or questions about that. And since you have been working with some of these small business owners in our coaching groups, you have also kind of seen like the struggle is real. It's real for the bookkeepers and accountants. It's real for the business owner.
Yeah, the challenge, I think, is when the businesses rely on their tax accountants to set their books up and their chart of accounts, they're setting it up to do taxes. They're not setting your books up to run your business, to operate on a daily, monthly, and yearly basis. So to them, an expense is an expense is an expense. So the tax accountants really don't care where the expense is. But, as the business owners, we need to know what our cost of goods sold are so we can figure out what our gross profit margin is. And we need to know what our overhead cost is. So, one of the challenges that I had was just relying on a tax accountant to line up my books. And they couldn't get there. They couldn't give me all the information that we needed. And then they do what they need to do to get the taxes done. So, one of the things, and I've heard people brag about how little they pay to get their taxes done, but they're not talking about how right their books are. They're just, so sometimes the easier the accountant can make it for themselves to do the taxes to keep your tax bill down, the worse your books are to operate from a day-to-day basis because there's no clarity, there's no vision, there's no transparency. So, really having your books set up properly so I could run my business and see and have that transparency day to day is more important to me than having it, a cheap tax bill. Because my business was growing, we want to grow more. I need to know how much cash is in the business, what's going on. It's not about, that was the goal with having this, doing bookkeeping work with you guys and getting that stuff. It was about, having a more profitable business that can grow and not having the lowest, tax bill from my accountant. So it really depends on what your focus is in your company.
Mm-hmm.
No, and you bring up a really good point. I don't know how many times we've seen new clients that come on board, Steve, where they have one income chart of account line and one COG account. And everything gets put and funneled into these two accounts, and it gives them no visibility. They sell several different products or do several different services, but they have no idea which service is producing them the most revenue because it's all lumped into one or two items. And it's crazy how many business owners we work with, and it's like we work with them directly to say, hey, what makes sense and how can we break this out? Like, what clarity can we give you? And how happy they are to actually see this finally and go, oh my goodness, yes. It makes so much more sense now, and it's so helpful to see this breakout and this split. But you're right, they just lump them all together to make, it makes it easier.
And it's a tragedy, really, because if it's not all broken out, if I don't know what I'm making, what's my gross profit margin on lawn treatments, on snow plowing, on lawn mowing, on landscape installation, and then I go to start marketing and advertising, I can have an awesome campaign for marketing and advertising, and even a salesperson brought on to sell my lowest gross profit margin items.
Right.
Because if I don't know it broken out by service offering, I can spend a lot of time and money focusing on the lowest gross profit margin, and I don't know. I could guess, I could be intuitive, which, good luck with that. But if you break your books out and you're using them in a managerial role, that's a whole different opportunity.
Mm-hmm. Exactly.
Yeah, I feel like there's a lot of opportunity that gets missed around strategically, utilizing the tools in your business. And one of the biggest tools is your financials. It is your profit and loss statement. It's your balance sheet. It's that cash flow. And even implementing profit first in a business, it's really a game changer when it comes to strategic planning. And what I'm hearing, in our conversation here is it's not always the lack of business acumen, but the lack of transparency that the technical foundation of your books, like your chart of accounts and how things are being reported, that's really, the culprit in this story of not being able to provide the business owner that information they need to even start thinking about being strategic in their business. And so it kind of ties back to another one of those lost opportunities is if a company doesn't have good financials, like that structure in order to tell a story, what opportunities are they missing year after year after year? How much profit are they kind of just throwing out the window because they can't just look at those financials and make better business decisions?
Exactly. Or what are they putting up with by not having that as well, where they're think that they have a client and that might be their most money-making client, and they're also the most, worst client to deal with, and they're putting up with this client. And when you look at it and look at in reality, they don't make much money or any money on that client. And so it's time to get rid of that client. And the ease of what that would cause, the stress alone that would relieve would be, beneficial as well.
And also taking care of your team, because if
Yes.
your numbers and your books aren't transparent and clear how to manage them and what the numbers mean is, you could be either overpaying or underpaying your team. So it could make it difficult to attract, and it's very difficult to hire people now. So if you don't know, I could pay this and get more new employees to fill these roles because you're not tracking your numbers properly and your gross profit margin. That could also, so that's another point of frustration. And I think that is on Facebook lawn care groups. I think that is every day. How much can I pay a guy? How much should I pay a guy? And they shouldn't be asking Facebook. They should be asking their accounting firm how much they can afford to pay somebody and what that gross profit margin is going to be. And the answers are hilarious. They're all over the place. And one of the things that I love about the answers are no one ever asks a question like, what's your gross profit margin, or, what's your return, or any of that. They give all this interesting advice. So, I mean, I think just working with core growth strategies and just having the opportunity to actually know what your numbers are and actually know what you can charge and pay people is, if you're doing that, you're in the top 5% of not just the lawn care and landscape business. You're in the top 5% of all small businesses.
Yeah. Yeah. And I have to say, not all accountants are going, and bookkeepers are going to connect at this level. Some of them, don't really understand the concept of cost accounting.
Mm-hmm.
And that's one of the things that all trade industries need is they need an accountant who has their own level of business acumen that can set down. And I had this conversation, with somebody earlier today to where it's like, okay, let's look at your labor burden. And I know I've had conversations with business owners where I'm like, do you have a labor burden? They say, well, what's a labor burden? What is that? And it's like, okay, this is a great place to start. It's like, don't beat yourself up for not knowing it before, reward yourself for learning it now. And I think that that's really important. And to tie what are your costs in producing your product to your income. And when you know those things, you have control. You have control of your gross profit margin. You have control of that profit that you keep at the end of the day, the end of the year, the end of the month, whatever it is. And you can also have just more insightful on your pricing. Like, are you pricing enough? Right. And some people go, yeah, I'm sure. Yes, I'm pricing enough. How do you know? How do you know you're pricing enough? So making sure that you have the right accountant and bookkeeper to have those conversations are important. And know, be a little forgiving. The person that you hired originally may not be that right person, and that's okay. It's not their specialty, but now take the time to find somebody that is the right person so you can start having those conversations.
Right. Exactly.
So when it comes to tracking, the financials in your business, and again, when we say financials, we're talking about the P&L, we're talking about the balance sheet, the cash flow, what's your income, what's your cost of goods sold, so your COGS and your expenses. Jaime, what are some metrics that a small business owner should track regularly that's going to give them the insight they need to be strategic about their business choices?
Good question. I think, the biggest, cash is key, and so revenue is key. That's the first one, is knowing what revenue, the income that you're bringing in, and that it's actually being tracked correctly. We have a lot of some of the things when we look at our clients is, the discounts aren't right, or they're putting things in COG where they shouldn't be. And so understanding your revenue, how that's being brought in, again, your gross profit margin, that's the percentage of revenue that remains after your cost of goods sold is deducted that we mentioned. And it's like making sure things are being allocated correctly there. You'd mentioned payroll where you might have field labor or install crews, anything that goes to producing or making, manufacturing the product or service that you sell. that all needs to be put into the COGS section. So if you have an installer to install that product, that needs his time, his payroll, all those taxes need to be put into your COGS so that you do have your gross profit margin correctly. Operating expenses is after that, especially as you move down your P&L. And those are, it captures everything else. You'd mentioned variable versus fixed. There's various ways to set up your chart of accounts with that. That's all the money that you spend running the business, rent, utilities, office supplies, we've mentioned, anything and everything that is outside of COGS to run your business. Gives you your overall, after your expenses, gives you that net profit number. And I think that's key, because not only is your revenue important, but it's after you've paid out all the COGS expenses, after you've paid out all of the actual operating expenses, gives you that net profit. And that's the money that you have left over, And so where that is determines kind of how well your business is doing, so.
Yeah. And sometimes I think too, it's not always about the top line revenue, but you can keep your top line revenue where it's at because maybe you're at capacity with your team. And we talk about this in strategies, in our small groups, our office hour calls, like things like that. I feel like this is kind of one of those fun, quick and easy topics that everybody just loves to chat about is, how do you improve that net profit? Like what's left over? Like how do we become more efficient, more productive? What does that look like? So it's not always about, blowing up that top line revenue. It's like, let's make that, that net profit margin. And I know Steve has like a little saying about, his net profit, that he likes to share. And I agree with them. It's like, net profit is key. What is it that you say about your net profit?
The gross profit margin, sexy gross profit margin.
Yes.
Yeah. So, and that's one of the things. So I focus on the gross profit margin, because that allows me to have a certain percent of net profit, right? Because if my gross profit margin is not high enough, I always have a certain amount of fixed costs, no matter what I do. So if I can get my gross profit margin, that gives me the net I need above my total cost. So that's why I like that 60 to 65% gross profit margin, because then you can have that 20% plus net. And if it's below 60%, if it's 40%, it's hard to have a 20% gross net, because once your overhead and all your other expenses eat that up. So I always say 40% gross profit margin is kind of like the smoke alarm. And once you drop below that, you're on fire. 50% gross profit margin is reasonable. And, 65% is the sexy gross profit margin.
Yeah.
I've never heard numbers be sexy, but I like it.
Well, and the reason I call it sexy, because if you can hit that 65% gross profit margin, then your net is going to be high enough where you can live a lifestyle that is fun and worth the risk and worth the endeavor of owning and running a small business. Because when you own a small business, there's cost. Sure, you're the manager. Sure, you're doing some of the work, but you're signing that. I'm signing the guarantee on those trucks. I'm signing the guarantee on those tractors. I'm on my name. I have to go, sign the notes for the lawyers when we buy property. My name's on everything. So, the stress and working, 6 days a week or 7 days a week. So when that net income is there, it just makes the business more sexy. It's not very sexy to work 7 days a week and say, where's the money? Where's the money year after year? That's not very sexy.
Mm-hmm. Yeah.
No, makes sense.
Mm-hmm.
So that's how I got there.
Core Growth Strategies provides business growth management solutions through cloud accounting, bookkeeping, and strategic business consulting programs. Our team works with small businesses in lawn care and landscape and trade industries throughout the U.S. We increase our clients' business acumen by creating business performance transparency through financials and strategic advisement based on industry best practices and benchmarks. Our experienced team provides support, guidance, and coaching, thereby allowing our clients to connect with viable data and discover their own solutions. Core Growth Strategies programs and services are designed to get your business from where it is now to where you have always dreamed it to be. Visit us today at coregrowthstrategies.com and follow us on Facebook, Instagram, or LinkedIn. Don't miss our exclusive limited time podcast special. Just mention promo code GPA Pro to any member of our team during your complimentary consultation, or enter the promo code on our site when you sign up for one of our online programs. That's promo code GPA Pro. So we have revenue, we have sexy gross profit margin, we have operating expenses, net profit. What else do they track in their business? What else is good to track?
I think, your cash flow, so, like Steve was saying, the sexiness of having a higher gross profit gives you that net number you're looking for with your cash flow. And that's the amount of money you have going in and out of your business, obviously. And so, being able to know where that money is being spent, how it's being spent, part of that is with your accounts receivable and accounts payable. And sometimes people get those confused. And accounts receivable, a good way to remember is just what that is. It's receiving money. So accounts that you're receiving money from people. So all this is anything that you put an invoice to your clients and you're expecting to be paid. That's your accounts receivable. And then your accounts payable is the outflow of any bills that you might be having. You always want, your accounts receivable to be, high in some aspects because that means you're making more money. But you also, with that, you want to make sure that everything stays below 60 days current. So, the big aspect of having some businesses is that, they're great at invoicing, but if they don't have their system set up right to be able to automatically charge or have that recurring charge, then they can let their accounts receivable get over that 90 days and they struggle in collecting that. And so we work with our clients to help, bring that number back into below 60 days so that it stays current, so that it's actually a meaningful number to have. And then accounts payable is the money that you obviously owe your vendors and suppliers. And, anytime you can cut costs or, have that low, we always look for that. So those are the two ones that, every kind of that tie into your cash flow. There's other aspects like your inventory. If you have inventory, making sure that's being tracked and accounted for correctly. You never want to have too high of an inventory number, in my opinion, because that's just cash sitting either on a pallet or a shelf and collecting dust. And so you have to be mindful of that. But also, if you are able to buy in bulk and save or buy ahead of time, you always want to take advantage of that. A lot of vendors too, and something to look for, suppliers will give you discounts as well if you pay them ahead of time or work with that. So, we always recommend definitely talk with your vendors, talk with your suppliers and see what deals you can get for that and work with them for.
Yeah. And we've also seen in business around inventory is they'll buy things they don't need because they don't know what they have.
Yes.
But they're struggling to make payroll, or pay rent. And it's like, then it's like, well, are you sure you needed to buy that? And then they go out there and they're like, oh, I have a whole pallet of that. I didn't need to buy that. And if they hadn't have bought that, then they could have easily made payroll. So it kind of messes with their cash flow if the inventory isn't managed properly. And then I would also say around, accounts receivable is that mindset. And I know we've coached around this for years, is that mindset of, I have to bill them. I have to put out an invoice. I can't collect the money automatically. I can't, when I go render service to collect that. So it's really, I think managing the accounts receivable can also be a mindset thing to where it's like, what, it's okay. You can ask for the money up front. You can ask for the money when services are rendered. It's less of a headache. And there has been, especially working with the trades industry over the years and even some other accountants, is really getting them in that mindset of, hey, your work is valuable. Let's set up a system And the people who don't want to comply to the system, they can go and you can service somebody better.
Exactly. And it's interesting that you brought that up because, you know, on top of that, we live in such a like instant gratification world right now with all the technology. And but that also transitions into, you know, people don't actually have, even personally, it is few and far between that you find someone who actually has checks, manages a bank register like they used to, and pays bills that way, right? We're all so busy that a lot of what we do is paid automatically and deducted from my bank account, right? So that I don't have to think about it from a personal standpoint of did I pay that bill? And so we talk to our clients about that as well. So it's like it's not just changing, you know, how you bill or you need to change your mindset, but the mindset of your client has already been changed. So it makes it that much easier. You're certainly going to run into a few of those people who are like, I want to see it. I want to make sure whatever may be the case. But as soon as the job is done, they expect to be charged and if they can charge it automatically so that they don't have to worry about, did I pay this? Did I receive it? Whatever may be the case, it's that much cleaner. And so I think we've moved as a society toward that a little bit, and business owners forget. And a lot of business owners kind of almost struggle with that because it's like that value of your worth, right? That you actually, you know, you're charging a fare for what you delivered. And most business owners over deliver, but it still is like, oh, you have to ask for those money and those funds. And sometimes they struggle, but it's again, that mindset, like you mentioned.
Yeah, it can be uncomfortable because, you know, when I started my business 40 years ago, how the model worked is you would work all month, bill at the end of the month, and then wait 30 days. So you were 60 days.
Yeah.
And it was crazy. And I've lost customers because we switched to, you know, where we would start billing every 2 weeks, or we would bill, you know, half the customers. I think we had about 300 or 400 customers then for mowing, which is a lot. So every 2 weeks we would bill half of them, and the other half they would go out. But it was payment on demand. So it was no more 30 days. And they're like, that's not how it works. So I think as business owners, you know, we're used to kind of that wholesale, like we get billed, we pay them, you know, so, but that's not retail. That's not how retail works.
Mm-hmm.
How I coach people around this is I'm like, when's the last time you went to Walmart and just walked out and said, you know what? You know what, Walmart, I'll pay you at the end of next month. Or if it works really well, Walmart, I'll pay you. I'll come back and pay you. But I'm going to walk out now and with this TV, and if my team wins and I'm happy, I'll pay you. You know, that just, if it doesn't work, obviously you can return it. But, you know, you don't walk out of Walmart. And, you know, I was very fortunate years ago to develop a system of getting paid quickly and easily, and it just served me so well. I mean, I'm so proud, knock on wood, to say that in 2022, we had $0 uncollected. Zero was our first time ever because our process is improving, but we had zero not, you know, uncollected. Usually it's less than 1% because of the systems that we've worked on over the years and the expectations with our customers. And the other day it was interesting. We had finished a landscape job and the crew hadn't even made it back to the shop, and they were calling to pay. So it hadn't even been registered that the job was completed yet. With the office, and the people, like you said, Jaime, they want to pay. They're trained to, okay, the job is done. Now I pay.
It's over. Yeah, exactly.
So, you know, as business owners, if we're still struggling with that, it's time to move on.
Yes.
Yeah.
And like you said, you could set those, you can set those systems in place, you know, and there's a lot of automation that you could do that as a business owner, you don't have to worry about that as well. So, you know, it's just changing it up, putting the systems in place, and I have it go smoother.
Yeah. I agree. We're really in that swipe and go, you know, society and mindset to where, or even auto charge. Like if somebody can just automatically charge me instead of send me an invoice, and I know, you know, I'm like, yeah, I'm good with that. It saves me time. I don't have to worry about it. You know, so that's something that we have set up, you know, in our company. And then also we have helped clients set that up. And it's important to where it's like, hey, it's one less thing you have to worry about as a business owner. your cash flow is going to be happening on its own. It's going to get deposited in the bank. It's easy, it's there, and it's done. And I think the other thing too that I've heard is the accounts payable. And I know that this has made a huge change is implementing profit first in a business is the accounts payable. There's a cash flow rhythm that comes with implementing profit first in a business. Mm-hmm. And it's, instead of paying bills, once a month or every 60 days or something like that, because they don't have the cash flow, the profit first implementation really gets them in a new place to where they're paying it like twice a month. Mm-hmm. And we've had clients go, oh, well, I'm not used to this. Like, even if a bill goes, it's sitting in their business for 2 weeks, it's this new normal where they're so uncomfortable. And when we first started working with them, it was 90 days out. Like, they were paying their bills 90 days out. Now one comes in and it's sitting there and they don't have to process until like the 10th or, the 25th, and it's sitting there and they're like, what am I going to, but there's this bill here and I can pay it. I have this money. And it's like, yeah, how's that new normal feel for you? Mm-hmm. And they're like kind of uncomfortable because I have the cash, but I know I'm supposed to wait to pay this bill until, our whatever the rhythm is, whether it's weekly or the twice a month. So there's that, accounts payable to where your business can be so healthy mm-hmm. that you could pay your bills in advance. You could pay them as they walk in the door, even though we advise against it. Like, let your business have a rhythm. But that's an interesting kind of insight to that. When you said accounts payable, I'm like, wow, there's been all this evolution around the concept of accounts payable that really is around behavior and mindset as well.
Absolutely.
And that's what we see when we get clients on Profit First is now all of a sudden they've had more money than they've ever had in their accounts.
Oh,
they want to start paying off everything ahead of time. And we're like, slow down. There's a reason why you have it in, because we're being intentional and strategic and we're doing it in percentages. We're going to need that money at other parts of the time of the year because we're doing it on a percentage of revenue and income and real revenue. So, but they've never seen that much money in their accounts. And I almost weekly have that conversation with a client that's been with us for less than a year. They've been with us for like 4 to 6 months. They're like, I've never seen this much money. Is everything real? So
I agree. It's huge having that profit first system in place, just seeing the difference in our clients that have it implemented, just starting versus those that have been in years versus those that don't have it implemented. It's night and day when you look at it. It's crazy. But yeah, you're right. They have the money. So they're like, again, goes back to that mindset. If I have a bill, let's pay it. If I can take it, like people expect to pay things as soon as they get them. But in this case, we want our clients just wait for the rhythm and just process it with the rhythm. And,
Yeah.
Too funny.
So are there any other KPIs that they should be tracking?
Let's see. We mentioned inventory. Obviously, that's a big one because you don't want that sitting and collecting dust, basically cash. Debt to equity ratio. That's the amount of debt the business has in relation to its equity. Again, this falls into your balance sheet. You always want to make sure that that ratio is acceptable because you can have the correct assets and liabilities always have to match on your revenue. On your balance sheet, but you don't want to have so much like fixed assets, like equipment and purchases and all these loans outstanding, but your cash, your liquidity to be super low. So, having that ratio be on point. But again, where that profit first comes into place, having those accounts, especially those advanced accounts that you can put together, where you can set aside money for equipment. Then you have the decision on where you buy, get a loan or do you actually pay cash for that equipment? I mean, there's a lot of stuff that works with Profit First for that. And then, your return on investment, and that's the percentage of profit gained on the investment that you put into the business. Again, just some points to bring up, but
Yeah, and we talk about like knowing your return on investment when it comes to your equipment, because your equipment can make money for you if you set it up properly, or even, your labor in your business, making sure your crew size is right, because you could have a return on investment on your labor in your business. So those are things, and this is also why it's important to know your labor burden is, yeah, to make sure, and if you don't have one, work with your accountant to get one, because it's going to be a huge eye opener for any business owner to know their labor burden. So I think that that's important. And the debt to equity ratio, I think that is an interesting topic, because typically when we start working with business owners and implementing profit first, and even over at Core, when we've done renovations on their chart of accounts, one of the biggest pain points that they share is, well, I don't know, how much we can afford. Like, can we afford to buy a new truck? Can we afford this payment? Can we afford, because they're looking at the profit and loss statement, and they're seeing what's at the bottom of the profit and loss statement. They're like, well, where's all this money? And they're not thinking about that debt liability that's sitting over on the balance sheet, and knowing what they can or can't afford. And this is a huge gap in that I've seen running a business, where it's just this profit bleed, and the business is hemorrhaging, and they're like, I don't know where we're bleeding. And it's right there. It's that debt to equity ratio in the business, and even like what they have to serve with their revenue, with their liabilities in their business.
Right. Because just like inventory, you can buy so much equipment, and if it's just sitting there not being used, again, that's just cash. That's just not being utilized correctly, especially if you're not using it or renting it out and whatnot, if you're not using it. So I agree. Yeah, where you can spend too much, get too much debt.
Yeah.
Yeah, I call it too much month at the end of the money.
Interesting.
Yeah, right. I've been there. Too much equipment makes sense. You're busy, buy another piece of equipment.
Yeah.
You're not looking at your debt to equity ratio or your cash flow. It just made sense. Well, every other landscaper in town has a loader like that. You must need a loader. Isn't that how you do business? Because, well, everybody has those loaders. So that must be how to run a landscape business. No, they never have a conversation about debt to equity. Yeah, I was just running mine when we were sitting here, and it's interesting. So there's, I guess there is good and bad debt to equity, right? But so my question would be is, how do you start using it and tracking it? Like, okay, it's this today. Do I want to get it less? So then I can start saying, well, if I buy this piece of equipment and 2 trucks, now my debt to equity ratio is higher debt to equity. Equity is what I own in the business, the assets that I have in the business. So, then I can at least have a conversation around that, as opposed to just having 2 more shiny trucks in a parking lot.
Mhm. Yeah, because we know how much lawn and landscape business owners love their toys. They love their equipment. They love their trucks. They love their tractors.
Mhm.
And some guys they don't want any debt. So they will they'll forego their income, their personal income. So they'll cut their what they're living off of and what they're supporting their family off, so they don't have any business debt. So there's a fine balance between that. There's a fine balance between not enough debt or any debt, and then way too much debt.
Yeah. So, Jamie, how have you seen over the years in working with businesses, small businesses, how they have used their financials to drive success and growth in their business?
That's a good question, because I think the biggest aspect is just giving them the clarity that they need. And it helps to identify opportunities, mitigate risks that they might have, but basically to operate their operations, their business for a long-term success plan. You know, that that's that's a big aspect by using the financials. They can budget, they can forecast. We always try and get those set up and work with our clients. That's like a big end of the year, fourth quarter, beginning of fourth quarter. You always want to start looking for the new year and set your goals, work with them on KPIs. Having your financials works as well with setting trends. You start to see trends and patterns within your financials. Some things may be cyclical. It could, you have a low season, you identify when that is versus your high season. You can start to prepare for that. We have a client where end of the year is big for them, that rush for the retail industry, they have to start prepping months and months in advance. There's also other little peaks throughout the year that they have noticed. So learning those, being able to manage the cash flow appropriately around those areas, especially the low tide. It's funny because one of the things that we see and we struggle with our clients sometimes is that they know the low season's coming, yet they don't want to, and this is more of our fully operating profit first clients, but they don't want to lower the operating expenses to offset, they just want to keep the operating expenses where they are, but it's like you kind of have to adjust. You can't just keep spending when you don't have it. And so it helps to identify those as well, which is interesting. Every client is always so unique from that understanding. But being able to,
peaks and valleys of how their business is performing. And
yes.
So kind of them gaining a better insight on when does change come? When do we have to gear up? When do we gear down with the operations in the business, and gaining that transparency?
Yeah. And it really does give that insight. It's amazing to see once you get your financials in the place where you can read them and see them and start comparing. We always like to do comparable financials where you see 1 year against the last year, whether it's by month, by year, by quarter, and you can see if you're up or down, if you're growing, how you spent in comparison to, and so we work with our clients to start to see those trends.
And what are some of the things that you have found with working with small businesses that gives them better insight? Like, what are some of the conversations that you and your team have with a small business owner?
Oh man, we talk to them all the time. I love having I usually will have like a month-end call with a client to go over their financials, or maybe it's quarterly, we can sit down. But it's going off of, again, doing the comparative of like one period of time versus the current period of time, and seeing the changes there. A lot of our clients will start a marketing campaign of sorts, and they'll invest up to like 50 grand more than they did last year. And you obviously have to give time for marketing, but after so long, it's like, okay, your revenue has increased. So, are you doing your, ROI on your marketing campaign? Are you looking to see if you're really spending the money wisely and in the appropriate areas? Other aspects is like having that growth being stagnant, yet your COGS for your payroll, you have too many people working, and that's where it's like the business owners fall in love with their employees, especially those that have been year after year, and it's so hard to make changes, and we understand that. And so, but if the revenue drops down and your payroll is still so high, discussions have to be had. Can you adjust? Can you reallocate? Can you do
kind of changes be made. Well, I will share a couple stories. I know there was a client that we work with and that you do their accounting for, and they were so, I'll use the old tickled pink at how excited they were regarding the books and how they lined up and how correct they were. And then the office manager could go to the owner, and he was so excited because all the numbers matched up perfectly. And they were just so thrilled. And, now he has really good data instead of always being 3 or 6 months behind. He was always playing behind because by the time he got the stuff back, the way he was doing it before he was always like, oh, okay, the game's over. We should have done this. And he feels in, a lot better control. And then I was on a call with you during the office hours that we have. And, there was someone in there and he was, we were having a really good conversation with the finances and possibly buying another business and what the finances of that business had to look like.
Right.
And I was so impressed with how he knew what questions to ask. He knew what numbers to consider. He knew what the ROI needed to be to even go any further. He knew what was wrong with what was lacking in the business's books that he was looking at. So, I mean, and I know he said he didn't even was unaware to even have that conversation before he started working with you guys.
I was so proud of that moment when I had that discussion with him because, again, it's working with our clients in a way that, again, educating them on where the red flags are, where to start seeing the bleeds and how to understand your financials, not by looking at your bank account to see if you can afford to go buy something and make a decision off of that, right? And so, yeah, I was so proud because he came, I'm like, well, yeah, there's some red flags, but like, what did you notice? And how he was able to be like, oh, well, it's this and it's that. And I noticed this. And I was like, oh, I'm so proud. We've been working with this client, we got his books arranged. We actually, kind of restructured a little his chart of accounts. He's been diving into our Profit First group. But yeah, and just how much we've seen him grow he looks at his financials all the time. But you'd mentioned another point with, being able to see, having the sales lineup. So a lot of clients have a third-party sales platform that they use outside of like their accounting system, right? If they use QuickBooks, not all of them use QuickBooks to bill. And so what we've done is work with our clients to get whatever CRM or whatever sales platform that they use outside that third-party system to get the reporting where it comes in, and either we can get it to sync or we can get it so we can match the correct reports and get their QuickBooks to match so that they don't have to go and look at that system for sales and then QuickBooks for this. It's all in one system so that they just print some reports. They can see a true picture of their overall company, and it's so much cleaner. And again, yeah, that our one client, it's just be able to have that clarity after so many years of not having it. And he could never really trust the third-party system on some aspects because, again, it had so many reporting options, which is great. But if you just tweaked it the wrong way, it gave you a whole different number that was not even remotely accurate to what it was. So just working with them on building that relationship with the third-party platform, getting the numbers over to QuickBooks so that he just has one place to look. And how much they've been able to, work within the system and grow from there has been phenomenal.
And I know personally from working with them, it's allowed them to take advantage of certain opportunities that they would have never been able for because they didn't have that financial awareness of where they actually stood right now in this time period.
Yeah.
Absolutely. And I think that is key. Like your financials are important, your business is important, but again, having that clarity in such a way where you can make a decision if on the dime, if need be, because you have the full picture. And I say this all the time to my clients, to be able to see that big picture around your company, not just one side or this or that. It's that full picture and being able to move within it to make the decisions as quickly as possible to take, opportunities as they come. Mm-hmm. Or avoid the landmines as you see them as well. I mean, that's the other key, right? You don't want to.
It's winning, taking advantage of opportunities and analyzing stuff and not taking the wrong step. That's winning too.
Yeah.
Because we've all done it. One step forward, two steps back. How painful, when we don't have to do the step back thing, that's always good.
Yes.
Yeah, and I think also too, which I like is because a lot around financials, there's the fear of unknown. What do I not know, that I don't know when it comes to business owners? And what I'm hearing a lot in this conversation, reflecting back on all that we've talked about today, is one of the questions that people who work with me know I ask, is it the person or the process? Where does the problem lie? And what we're finding here is a lot of it doesn't have to do with the person. So it's not really the business owner that is having the problem. It's the process that is in place that's not allowing for the transparency to take place. So really, if you invest in the right process to create that transparency, the person that we're working with, this business owner, there's probably a lot more business acumen and understanding that can be had once we clear up that process and make sure that that process is in place, it's understandable, it's creating the transparency, that we need. So I know as business owners, like, we'll kick ourselves pretty hard and we're like, well, I don't know about that, I don't have time for that, this is too confusing, this is too difficult, and may not want to share our challenges, because of that. Maybe it's embarrassment, maybe it's fear, maybe it's that idea like, I should know this, but I don't know this. So I really want to point out, as a business owner, give yourself that space and that grace to know, take the time, get your process in place, let it give you that clarity, that it's really trying to, or that it needs to, and you'll probably be further along than you ever thought that you were.
Agreed.
Absolutely. And I just remember how like powerful this guy felt, knowing that he even knew that. Like, he didn't even do anything with it. It was just the knowledge that he could make the really best decisions for his business, for the people that work there, and for his family. That was so empowering, and he wasn't guessing.
Yeah.
Yeah.
And he didn't have to leave any money on the table, and he didn't have to risk any money. I
Right.
mean, that's winning right there.
Yeah.
And knowing that that assuredly that is correct versus
Yes.
is this right, is this not right? Man, maybe, that unknown of you just don't know if it's right or accurate, or you're just kind of guessing. So yeah, having that
Yeah.
assurance behind
Super.
the numbers is big.
Super powerful. The emotion that went along with that,
Yeah.
knowing, and it was super powerful. And money is emotional, so when we know, we can feel better about money and ourselves, as business owners. Absolutely.
So Jaime, if a small business owner wanted to take the first steps to checking out, like, where are my books, what order are they in, where are the opportunities, what is it that they can do? I know that we're putting out, a nice little kind of offer today and some resources. So what is it that they can do?
There's several steps. Owning a business, especially one that may be smaller or whatnot, you want to always make sure you separate your personal finances out of the business finances. That's a lot of some of the cleanup we do on some of our new clients that come in, because it's like, I'm paying for everything. Why does it matter? Or I'm not getting a paycheck, so I'm going to use the funds here because whatever may be the case. I mean, we've all been there. And so it's keeping those separate. There's, if you don't have accounting software, get one. Like, that's huge. Get it into a system where you can pull the reports, have that chart of accounts set up where you can start to see and put the pieces together that forms the overall big picture and gives you the clarity that you need. Organizing and categorizing your transactions, get all your documents and all your receipts, especially if you have some personal aspects where you've purchased it personally but it's truly a business expense. Like, that's owed back to you, tax free. That's not you won't have income tax on that, like, you purchased this on behalf of the business. But getting those transactions and statements and getting them all together, and categorize them and ensure that, you can report these correctly onto your financials. Again, tracking that income expense correctly as well, reconciling your accounts. This is like a bank statement you get, or a credit card statement. You get them every month. Credit card bill comes in. That's the statement you use. It says this is where your balance was. These are all the new transactions, and this is your new balance. And so, you could actually then reconcile that in your books, making sure you've accounted for everything. That's the checks and balances to make sure that you're not missing any sort of transactions that you may have forgotten. A lot of platforms are really nice to use, the accounting platforms, because you can tie your banks directly to them. And so all of the bank transactions and credit card transactions will sync automatically to those accounting systems. And that's huge when you start to use it, because then you don't have to worry about, I forgot about that receipt somewhere, it's syncing automatically. Again, start utilizing financial reporting, so the balance sheet. your P&L and start to look at them and become aware of where you're spending your money. I think that is key. Like first and foremost, see where you're spending, where that money is going, and is that where you want your money to go? Should you make changes from those? You can always ask for professional assistance if needed, if you don't understand things. I know, talking with some new clients that come on board, it's like, I don't know what I don't know, or, what even to ask. There's no judgment here by any stretch. I couldn't go and run a landscape business and start that from scratch. I don't have the, knowledge for that. And a lot of business owners, and what I tell them is just that. It's like, look, we want to pull and help clear up your financials so that you don't have to worry about it, so that you can actually focus your strengths of growing your business.
Right.
I can't grow your business. I don't have the knowledge to do that. But what we can do is make sure that the financial data, that foundation that you need for your business, is in the right order so that you can grow. As you grow, that foundation is supported throughout the entire growth of that, so it doesn't collapse on itself. So,
right. Yeah, and I feel like it gives that opportunity for those conversations to be had, because we have some very powerful conversations with our clients, over the years, to where just by having a clear financials, the financials in a clean state where they're transparent, they can read them. We can guide them and run some strategies with forecasting and adding, new crew, a new piece of equipment, a new internal office team member, to where it's like we're moving the business owner out of the day to day while they properly scale and grow their business. And we do that by leaning into, transparent financials and letting the business tell us the story of numbers, is how, I like to say it. And I know you guys are offering, we have a review and consultation for core growth that we will be sharing in our show notes today. And to where if you're in a place where you're not sure, are your books in the right condition? Is there room for improvement? Are things being done properly? You can get a book review done on your books to see how is your business set up? Is it set up properly, to identify your profit centers in your business? And the core team will help you, identify that. So we're going to share the link in the show notes for a book review and a consultation that you can take advantage of. And just to kind of tie up what we were talking about today. So we really focused on a conversation around tracking and understanding your financial data, how essential it is for the success of a small business. And even by monitoring your data, you can make informed decisions, identify areas for improvement, manage cash flow, prepare for tax season, secure loans and investments, and grow your team, your team and your business and your revenue and your profits. And that's what the transparency of your financials can bring to the table.
Super. Thank you very much for joining us today, Jaime. Your insights were very, very helpful to me even. And it's always great to spend some time with you, and me having firsthand on how much you've helped people. Also, really, I was happy to have you here, and hopefully, you can connect with some people that need help and can reach out to you. One of the things that I will give kudos to you, you have a very unique way of taking accounting and numbers and softening the edges and finding a really authentic way to communicate and connect to business owners so they can step into their own numbers.
Thank you, Steve. That's very sweet. I have a passion for small businesses and entrepreneurs. It's something that's been ingrained in me. I've been an entrepreneur my entire life, and to be in a position here where I can help use my strengths from the numbers standpoint to help other business owners grow their business is a huge opportunity for me, and I love it. I love to connect with them, and we are like mini cheerleaders for our clients. And I tell them this all the time. It's like, oh, so and so made they made their numbers, or they just knocked their goal out of the park, or they were able to pay off something that they or like 6 months earlier, and so we are that support team as well, and cheerleaders for our clients and vice versa. So Yeah, we love it. So anytime, I appreciate you guys having me here. It's been a pleasure. And I hope, this helps answer some of those questions out there of the unknown for anyone who listens. And let us know how we can help if need be.
Fantastic. Thank you so much.
All right. Thank you.
Thanks for listening to the Green Profit Academy Pros Podcast.
The show that digs into the challenges of growing a lawn care and landscape business while maximizing your profit. Core Growth Strategies provides business growth management solutions through cloud accounting, bookkeeping, and strategic business consulting programs. Our team works with small businesses in lawn care and landscape and trade industries throughout the U.S. We increase our clients' business acumen by creating business performance transparency through financials and strategic advisement based on industry best practices and benchmarks. Our experienced team provides support, guidance, and coaching, thereby allowing our clients to connect with viable data and discover their own solutions. Core Growth Strategies programs and services are designed to get your business from where it is now to where you have always dreamed it to be. Visit us today at coregrowthstrategies.com and follow us on Facebook, Instagram, or LinkedIn. Don't miss our exclusive limited time podcast special. Just mention promo code GPA Pro to any member of our team during your complimentary consultation, or enter the promo code on our site when you sign up for one of our online programs. That's promo code GPA Pro.